Hi, and welcome to this week's edition of Market Wrap, brought to you by TRONEXO. To give you more context on the data and key market moves, I'll give floor to Ivo, our lead market analyst. Ivo, let's start with the big picture. Fed decision, a war escalating, and the third of the SAP reporting earnings, all in 1 week. Sharp drop, then consolidation. How would you explain that?
Fed decision came as expected. Therefore, we expected that the markets would react positively. However, what we did not expect was war escalating again, the main factor behind the sudden drop. Consolidation came as a result of war de-escalating again, and partially earning reports which were regarded mostly positively.
Could you be more specific about Fed? Rates held exactly what everyone expected. So why did booty in size and the dollar drop?
3 members voted for a hike, which indicated slightly hawkish turn.
Any other factors?
Fed named energy and AI-driven inflation the main threats. In other words, if US-Iran war continues, the energy prices will increase. Also, there are increased costs of the development in AI sector. The dollar index crash can be explained by traders expecting a hike, downward selling pressure, and subsequent liquidations.
You mentioned escalation of US-Iran war. What exactly happened and what was the impact?
We got escalation and de-escalation in the same week. First headlines from Wednesday signaled renewed military activity in both Iran and neighboring countries. The news about de-escalation appeared, considered as a relief by the markets. In general, the regional tension is higher now than it was 7 days ago, but markets are near all-time highs.
And the price action?
WTI spiked 5.5% on Wednesday, but it's been on the decline for the past few days.
I get it. So there is Fed seeming slightly more hawkish and renewed military activity in the Middle East. What's the connection between the mentioned factors?
Fed indicated inflationary threats, then, as a result of war escalating again, prices of oils increased, caused even more panic, and therefore pushed the equities even lower.
Let's return to the macro data. Q2 GDP came at a 1% annualized, down from 2.1. How weak is that?
Weak, but not alarming. It's an advanced estimate. It gets revised. However, the direction is clear. Step down from Q1.
What about inflation?
Cooling on both measures. Headline PCE at 3.7 year-over-year, down from 4.1. Core at 3.3, down from 3.4.
What do those numbers mean for Fed?
Keep the interest rates as they are. Growth slowing, inflation decreasing, but still well above the target. That's not a picture that demands action in either direction. It's exactly the data set that justifies a hold.
What about the earnings? About a third of the S&P has reported, including 5 of the Magnificent 7. What separated the winners from the losers?
One question. Can you turn capex into revenue? That was the entire filter.
Give me the split.
Microsoft up 22%, Amazon up 15%. Both showed the spend converting, Meta down 20%, Apple down close to 10%. Both spending, neither demonstrating the conversion at the pace the market wanted.
That's a brutal spread for companies in the same trade.
It's the most important repricing of the week, and it got the least attention. For 2 years, the market rewarded AI capital expenditure on announcement. This quarter, it stopped. The spend is now a cost until proven otherwise.
Given all of that, why did the indices finish higher?
Initial volatility was mostly downward, as the information on Wednesday seemed rather confusing. US indices closed the week up between 0.7 and 1%. Stable data, no policy surprise, no supply shock.
And the assets that usually capitalize on geopolitical risk?
Barely moved. Gold up 0.9%. If the market genuinely believed the Iran situation was escalating towards supply disruption, gold would rise much more. It didn't because capital was busy elsewhere, sorting winners from losers inside earnings.
What's the key lesson from all of that?
Don't look for one event or piece of information having direct correlation with a specific asset. Sure, sometimes it's that simple. However, most of the time there is a mix of factors with various impact on the final outcome.